Good morning. This is Larry McMillan with a stock market update on Wednesday, April 21st, right around the opening of the market today. So S&P and the other major indices, NASDAQ 100 and the Dow in particular, all made new all-time highs at the end of last week, but have stumbled a little bit coming into this week. And of course, they were very overbought, but we didn't really have any sell signals. Now, some of those are beginning to appear at the current time. But the chart of the S&P is still quite bullish. It's just now barely come back into less overbought territory, but it's still well above its rising 20-day moving average and other moving averages as well, including modified Bollinger Bands. Speaking of the modified Bollinger Bands, though, a classic modified Bollinger Band sell signal did occur last night on last night's close. We require a little bit of more confirmation from that, though, to generate what we call an MVB, McMillan Volatility Band sell signal. So we would like to see it at least close below yesterday's low, which was, I believe, 41.18. Close below there before we consider shorting the market. There's support at several levels. One right in this particular area, right around 41.14. And then below that at the March highs, just under 4,000. And then the extremely important support down there at 38.50 to 38.70. So the market had raced up so quickly that a fairly large pullback could take place under the guise of a correction and not be, the end of, let's say, the bull market or something like that. Equivalently, put-call ratios remain bullish. The weighted ratio continues to fall. There has been a little bit more put buying this week, but we're not seeing it reflected in the ratios. If they should begin to rise, then that would be troublesome. Market breadth has been a problem, though, and we do have breadth oscillator sell signals now from both our oscillators, the New York Stock Exchange data and the stocks only data. The cumulative indicators had moved to new highs last week in terms of the advanced decline line, but they are, that doesn't really give us any indication of where the market's going in the future. However, the cumulative volume breadth is still on the negative divergence that began last March 15th, and so that's fairly negative. New highs have continued to outdistance new lows, at least on the New York Stock Exchange. NASDAQ, that changed a little bit yesterday, but it's the NYSE new highs versus new lows that we look at. And as long as that's staying in positive territory, then that's still bullish for stocks. The volatility indices have crept up slightly. If VIX were to rise above close above 1925 today, that would put it back in spiking mode and would be a sign of caution. But it really hasn't jumped higher, even though the market's backed off in the last couple of days. So VIX is still at this point displaying a positive bias towards stocks, and the VIX term structure is positive as well. The May VIX futures are now the front month VIX future as of today, and it's trading at a healthy premium to VIX, and the term structure slopes upward, as I said. So all in all, we're really not getting many sell signals yet. We do have the breadth oscillator sell signal, and perhaps we will get a McMillan volatility band sell signal. But as you know, these things tend to accumulate before the market breaks badly. In any case, as long as the trend of S&P is higher, and we're still defining that as a close above 38.70, and as long as the trend of VIX is lower, which is in this case a close, continuing to close below 1925, then that's positive for stocks. So we're continuing to hold a core bullish position. We will trade negative positions around that as these confirmed sell signals occur. And then if the trend of SPX gets in trouble, we would roll over to a fully bearish position. But that doesn't seem likely to occur anytime soon. So have a great rest of the week trading, and we'll be recording again on Monday.